What is up, my Forex for Beginners family? Okay, today is a really exciting lesson. It's one of my favorites, and it's actually the foundation of chart analysis, and that is market structure. And today is going to be introduction to market structure. We're going to talk about it more in later chapters, but I just want to introduce the concept of market structure to you so that you can be aware of how the market flows and you'll be able to see when the market changes directions, and you'll be able to know when a trend is changing, which is absolutely valuable when you're a Forex trader or a cryptocurrency trader or a stock trader. It's the foundation of chart analysis. So I'm really excited to bring you this lesson today. Just as a reminder, we as traders, we use TradingView for chart analysis. TradingView is the best software that a trader can use for marking up the charts. And as traders, we mark up the charts and it shows us where the money is. So it's very important to have the best charting software you can have, and that's TradingView. And like I said in our previous chapters, that I send a ton of students to TradingView, and I told them, hey, I send a lot of students to you guys. I want you to give my students a great deal. So if you use our student link, all our students get a discount. Sign up for the 30-day trial. I suggest the Pro Plus or the Pro account, and you can take my whole training. It's a 30-day program, and complete it. You have a 30-day trial on TradingView, and at the end of 30 days, you can decide whether this trading lifestyle is for you or not. But I'm pretty sure you're not going to stop wanting to mark up the charts because, like I said before, I've been doing this 8 years, and every time I sit down on the charts, it's like I feel like that guy 8 years ago that just fell in love with the charts, because once you kind of get the hang of it, you can see the potential of how it can change your life. So use the student discount link. It'll be below in the student website or down in the comment section. And let's get to it. Okay, so last chapter we worked on setting up our support and resistance lines. Our support and resistance lines are really detailed, and they need to be accurate. So I don't want you to kind of mess up your charts right now. Trying to learn market structure. So I'm going to show you how to create a second chart for you to kind of mark up, and so you can leave your master chart for chart analysis, and then you can have a second chart for just learning and kind of trying new things and not worrying about messing up your master chart. Okay, so if you go up here, this is what my chart is labeled. This is called video drafts, obviously, because I'm doing a video right now for you guys. But if you go click on this, you can go and click on make a copy. So it'll make a copy of your current chart layout. And depending on your account, you can have one layout or two layouts or 5 layouts or 10 layouts. I have the Pro Plus account, so I have 10 layouts I can save. So just rename your chart here to, name it market structure if you want, and hit save. I already have 10 charts saved, so you might get this warning. And I've already saved a chart, so I'm not going to do upgrade, but you can upgrade if you want. Your account allows you to have multiple chart layouts. So if you go back to video drafts here, if you want to see all the layouts that you have saved, you go to load layout. And so you can see I have many layouts already saved. And the point of saving a layout is, right now we're working on the Australian dollar versus the US dollar up here on the left, and we're working on FXCM, that's our data source. If you want to have 2 charts using the same broker, it's actually not possible. So that's why you have to either make a copy or start a new chart layout. It's just making a copy. For you to learn market structure, I want you to have a clear chart. So when you know for sure that this is your copy, you can just go to the bottom left here and you can hit the garbage can and it actually removes all the lines from your chart. And if you accidentally do that, remember there's the undo buttons up here, so you can undo it. So that's one way to do it. The other way to do it is you can just change your data source. So right now, like I said before, we went up to here, we went AUD, AUD, USD. And last chapter, we selected FXCM. But you can select, see, this is a different data source. So if we go to Owanda, if you click on it, all of a sudden it's a new chart. It's the same pair, Australian dollar versus US dollar, but it's Owanda now, so it's a different data source. So you have a new chart that's blank. So you can work on that and not mess up your other chart. What I suggest doing is you can click over here on the right, and last chapter we saved Australian dollar versus US dollar. If you type in AUD, USD, it'll show you the different brokers. So make sure you can click on it and it'll save it there. Make sure you click on now Owanda and it'll save two of these pairs. So one, if I click on it right now, see it jumped back to my, my first chart where it's using the data source FXCM. And if I click on over here on the right on the second one, now it says Owanda. So I have a second chart. You know, every broker, the data is slightly different, but it's pretty close. All brokers should have pretty much the same chart data. But this is another way to, you know, if you've maxed out how many saved charts you have, you can always select a different broker. I prefer to use the same broker data, so I always use FXCM. That's the one I prefer. So for you guys that don't have the option to load a new chart, just go to your second data source, Owanda, and you'll have a nice blank chart like this. So when you finish watching this video, I want you to go to a new blank chart like this, go to the daily chart, and I want you to practice what I'm about to show you about market structure. So again, have a nice blank chart, go to the daily time frame, and then after you're finished watching this video, I want you to practice exactly what we did today. And you know, you're probably gonna have to watch this video a couple times. I'm gonna have some downloads for you as well, but it's really important. Like I said, it's a really important skill, market structure, that you need to learn. It's the foundation of charting analysis. Okay, let's get started. Okay, so what you're looking at now is my charts. I've already marked them up because I have a big lesson planned for you. So like I said, I want you at the daily chart, and then I want you just to scroll, follow what I'm doing, just using your mouse, just scroll all the way left, follow the candles, and I want you to really go back into the past. We want to go back into the past. So just keep scrolling, it'll go, you can use your wheel mouse too, and it'll only go so far back. So see here, it went back to June 1994. So this is where I want to start with introducing you to market structure. So you should have a new blank chart. You should scroll all the way as far as you can. It's going to be on the daily chart, so make sure it's the daily chart. And we're going to, in this lesson, we're going to be using a couple new items. This item right here, the rectangle, and you already should be familiar with trend lines. But basically right now, I want you to be familiar with using the rectangle. If you don't have it on your favorite yet, then I need you to go to the left column here. Right here, you should see, you know, it should be a rectangle. If you click this, make sure rectangle is favorited and ellipse, make sure those are two favorited. Once they're starred, you'll see them in this shortcut bar you have here. And we can move the square. If you left click and hold, you can move it to the left and organize it whichever way you want. So we can click on it once and then we'll click on our chart. We'll just make a square. I'm not sure what color yours is, but like I said, you can, you know, change the colors to whatever you want. We're going to change the size to the thickest size we can right there. And once you have it drawn just like throw it on your chart like that, you can save as and, you know, name it dark blue, whatever you want, and hit save. And then after you have that saved, then like I said in the last lesson, you know, whatever color it might be, you can quickly just go to dark blue clear box and it'll load your favorite. So that's how you favorite it. So we're going to be using the rectangle tool today. And now let's begin market structure. Okay, so market structure is pretty much, believe it or not, the market moves in a particular pattern. You know, it's either going up, going down, or it's consolidating. Consolidating means moving sideways. So something like here, see how it's kind of forming a box? That's kind of what we call consolidation, where it's kind of, it's not going up, it's not going down, it's kind of going sideways. So we're just gonna, I want you to also use the text tool. If you don't have the text tool, go to the left here and just favorite the text tool and it should show up here. So we're going to be using these two today. So I'm just going to delete this, and I want you guys to, after watching this video, I want you to use your wheel mouse, or if you don't have a wheel mouse, just use the plus and minus, and just minus or zoom all the way where you're not like, you actually can't see the detail of the candle. We just want it to kind of be like this, how it looks right now. This gives us a nice far out view of market structure. And using these rectangles, so click on this rectangle, I want you to start being able to see when there's an uptrend or a downtrend or consolidation. So I'm just going to start, and I want you to kind of just do this, start getting in a pattern or in a habit of doing this. You won't do this in the future, but right now I'm trying to train your eyes to be able to see when there's an uptrend, when there's a downtrend, and when there's consolidation or sideways movement, right? Something like this, again, is like sideways movement. And anyways, I'm going to show you. Let's just start from the left here. So you can see, you can just make a little box around here. Try to pick out the downtrend. So right here, you can see it's kind of making a downtrend, right? It's on a downtrend, and then something kind of changes around here, right? We're just kind of training our eyes right now to see there's a downtrend. And then we're just going to go back to the rectangle here, and don't click the next rectangle here because it's going to try to like change this one. Just scroll down a little bit and then click your mouse just so we're not interfering, and then just highlight the uptrend, right? I see like an uptrend here, right? Pretty easy, right? But you're training your eyes to actually see the uptrend and now a downtrend, right? We're trying to, you know, open your eyes to see how the market moves and pick out when we see a downtrend, uptrend, or consolidation. Okay, so I'm just going to quickly mark up what I see, right? 1 second here. So this is a bit of a, you know, kind of looks like a box, you know. I guess it's still kind of making an uptrend, but it's going to label that as a box. I'm going to maybe widen it. So that's kind of like an uptrend forming there. And then here we have a downtrend. And then here we have, you know, looks kind of sideways or consolidation to me. Yeah. Maybe about here, and then here we have a downtrend. Yeah. So you see, just by making boxes, now you can like kind of make sense a little bit, like you're kind of subdividing the market, and it's actually a really valuable skill to be able to just naturally picture the uptrend or downtrend or consolidation without making these boxes. And eventually you'll be able to do that. But right now, I want you to be able to identify a downtrend, an uptrend, another uptrend, and then a downtrend. We got some sideways movement and then a downtrend. So I just want you to go through this and just, keep doing this and just train your eyes to see the changes in the trend. So we're trying to detect naturally the changes in the trend. So I'm just going to keep doing this here. So that was an uptrend. Now we have, again, this is what we call a little bit of consolidation, just sideways movement. Again, right here, this is a nice area of sideways movement. It goes up, then goes down, but it's not really running away anywhere. It's staying in this zone. And then here we got some nice upward movement. And then again, we got some downward movement. Got some really fast downward movement, actually. So let's just step back and, even what we've done so far, you guys can keep doing this as much as you want just to train your eyes. But essentially, what I want you to be able to see is when we're marking up the charts, I want you to be able to detect when we're in a downtrend, or when we're in an uptrend, or when we're on an uptrend. This is a downtrend. We got some consolidation where it's just in this zone, and then it breaks out and starts falling, and then it starts climbing really rapidly. That's what I want you to be able to just naturally do by just looking at the charts. And so I've created this exercise for you to do, and just to train your eyes. And let's just continue a little bit here. We got an uptrend to about there. We got some sideways movement here. Price then kind of falls down quickly. A little bit of sideways movement, and then it rapidly increases. Kind of like there, but I'm just going to leave this. Just delete that. So that's the first thing I want you to do. Being able to identify when there's an uptrend, when there's a downtrend, when there's sideways movement. Because when there's sideways movement, we're not going to be trying to buy and sell, right? We're going to be, what we want to do as traders is we want to be able to join the trend. So when there's this sideways movement, we don't really want to be in here because, it's just going to, what we call hit our stop loss, and we'll be out of the market. What we want to do is when it's trending like this, that's when we want to join the trend. We want to join the trend at a certain point. When there's a pullback, that's when we want to join the trend. And we can do that in a downtrend, and then we can also join the trend in an uptrend. Let me just grab my arrow tool. And then when it's trending upwards like this, we could possibly join the trend here. When it goes up and there's a pullback, we can possibly join the trend here. Goes up, there's a pullback, we can join the trend here. And that's pretty much what we want to do. We want to join the trend when there's a pullback. When there's a pullback in an uptrend, when there's a pullback in a downtrend, that's the name of the game. We want to join the trend. So I hope you're able to see that. That's the first part that I want you to practice. So I want you to practice just like that, make some boxes, and just train your eyes to be able to identify that. Okay? Now the next part. Okay, so the next part I want to bring to your attention is this diagram that I've created. I'm going to make this a download. So don't worry about taking a picture or anything right now. I'm going to make it available for you to download. I want you to print this out and paste it in your, in your trade room or wherever you like to mark up the charts. I want this next to you. I want you to be able to picture this with your eyes closed, because this is essentially how the market moves, and we really need to know this concept really well. Okay, so let's look at the uptrend first. Okay, so let's look at the legend I drew here first. So in red is what I'm calling the impulse wave. So when there's price makes a big move up, that's what I'm calling as the impulse wave. And then when price pulls back like this is a pullback. It's called retracement. I really want you to understand what the word retracement means. Retracement means to come back. So if price is at point A and there's an impulse move to point B, then there's a retracement, what we call, and that goes to point C. So right now I want you to focus, it's a three-part move from A to B to C. So impulse wave, retracement. Impulse wave, retracement. Impulse wave, retracement. Impulse wave, retracement. So I want you to be able to, in an uptrend, now that we've, our previous markups where we're marking up boxes, we are able to identify an uptrend. And the uptrend consists of an impulse wave and then retracement, right? So I want you to always know what a retracement is. So the retracement is essentially the pullback. So when I was saying for us to, our goal is to join the trend, it's usually at point C, the retracement. So when there's an impulse wave, retracement. So I hope you understand the retracement part. So each one of these green arrows is a retracement, 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 and that's the pullback. The next thing I want to bring to your attention is what I mean by 100% retrace and break a structure. So 100% retrace just means, it's very important what it means. It means to come back all the way. So if point A is the starting point and price goes to point B, if it retraces all the way back to 100%, that's what we call 100% retrace. That's all I want you to first know. 100% retrace means when price moves from point A to point B, the retrace can retrace any amount. It can retrace this much, this much, this much. But if it comes back 100% all the way back to point A, that's what we call 100% retrace. And then what is BOS? I shorten it for BOS, but it means break of structure. Okay, remember, BOS is short for break of structure. Remember that. So we now know what 100% retrace means, right? It means when price retraces all the way back to 100%. And I put this dotted line here. That means point A, when price retraces back to 100%, that's the definition, 100% retrace. And then a break of structure is when we surpass 100%. So I really want you to understand that. 100% retrace is when price retraces back to 100%. So it goes from point A to point B and then retraces all the way. That's why I say 100%. It retraces all the way back. And if price continues going down, it's a break of structure. I just want you to understand what I mean by break of structure. So I hope you understand that point. It's a very important point. I hope you understand it. If you still need some help, just send me a message, show me a markup, and I can help you more. But for now, you should be quite clear what the difference between 100% retrace and what a break of structure is. Okay, so say price does not retrace to 100% and it doesn't break structure. It just continues up. So we have this new impulse wave. I didn't draw A, B, C, but anytime there's an impulse wave, just remember it's A, B, retrace to C, right? Just like here, A to B, retraces C. So I'm just going to walk through it again with you. From A, this is the impulse wave, and then this is the retracement. And I put the dotted lines at the start of the impulse wave. So again, did price come all the way back to 100%? And did price break structure by passing the 100% mark? And if it doesn't, then structure is not broken. It forms what we call a higher low. So this is the next thing I want you to do when you practice. When there's an uptrend, we mark up, we label it as higher high. So an uptrend, really remember this: higher high, higher low, higher high, higher low. And why is it a higher? Why do we call it a higher high? Because this point is a higher high than this previous higher high. Get that? It's a higher high than this point. And why do we call this a higher low? Because it's a higher low than this previous higher low. So say the words out loud if it confuses you, because if you say it out loud, you'll understand. It's a higher high than the previous high. It's a higher low. This is a low point. It's a higher low than that previous point. So that's why we label it as a higher low, then a higher high, higher low, and then I'll talk about this in 1 minute. So you just continue labeling higher high, higher low, higher high. Okay, so again, when it formed a higher high, we had a retrace, and we're wondering how far it's retracing. If it retraces all the way back to the beginning point, it's called 100% retrace. If it goes beyond it, it's called a break of structure. But it did not go back to the starting point. It made a higher low. And then there's a new impulse wave. So impulse wave, it makes a new higher high. And then we have a retracement. And the same question happens again. 1 second here. Did price come to retrace all the way back to 100%? Yes or no? And after that, did it surpass 100%? If so, we call it a break of structure. But in this case, it did not. It just went and formed a new higher low. So this is how the market moves. It goes in this upwards motion and then a pullback, upwards motion and pullback. And we usually want to join somewhere at the pullback, somewhere at the pullback. And I'm going to teach you all that later, but I want you to understand and just see the market, how it moves. I want you to sit back, and I'm going to go through more examples on the actual candlesticks and the chart in a minute, but I just want you to see how the uptrend moves. And then this is the next thing. I'm going to show you what a break of structure looks like. So we just made a higher high, we labeled it, price then retraced, it made a higher low. It did not retrace to 100%, the starting point. It made a new higher low. We label it as a higher low. And then we start noticing price starts doing something different. We were expecting what I drew here is, I'll erase this right now. We're expecting a higher high, right? We're expecting a higher high, just like what's been happening previously. It was making a higher high, higher low, higher high, higher low, and then we're expecting a new higher high. But in this case, it did not happen, right? Something different happened. And that's what I want you to notice. When something different happens, when it stops following this predictable pattern, that's when you want to just kind of sit back and say, hey, something has changed, something looks different. Let's sit back and see what's happening. And then so I'll just, if it doesn't make a higher high, just label it as a high, right? Just label it as a high. It's not a higher high. Some people end up just, labeling everything higher high, higher high. Don't do that. This higher high means something. Ask yourself, is it a higher high than the previous high? Yes, it is. Is this high higher than the previous high? No, it's not. So we'll just label it as a high. We're expecting it to make a higher high, right? That's what we were expecting, but it did not. Instead, it started forming a retrace. And that's when we come back to our definition of 100% retrace. So if this was where the impulse wave started, now it's retracing to 100%. And if it stopped at 100% and continued upwards, if it continued from 100% and continue upward, then that would not be a break of structure. Price can, it can float between here as much as it wants, but as long as it doesn't surpass 100%, we don't have a break of structure. So it could just bounce around here as long as you want. This is what I talk about consolidation. Remember how we said we made a square box? That's when price is kind of bouncing through here. It could bounce here as long as it wants, and then it could continue moving upwards to make a higher high, and that's all good. Momentum continues. Price continues its upward movement. That's fine. But if this does not happen, if it doesn't make a higher high, and in fact it breaks 100% and continues past 100%, I want you to highlight with an X, so we can just use the, and when you practice this chapter and when you post it in the student group for me to review whether you're identifying break of structure properly, I want you to use the text tool. I want you to, that's how I put that X there. I just put an X. You can change the size if you want, a little larger, say 24, and mark it with an X exactly where you think break of structure happens. So I can know for sure that you understand what it means to break structure. And that's it. That's what I want you to know for an uptrend. I want you to know that it makes this, this pattern of up and down. I want you to label it a higher high, higher low. I want you to, be aware of 100% retrace, break a structure, or is it just making a new higher low and moving upwards? And the labeling is different on a downtrend, and I'm going to go over that in 1 minute, but I just want you to make sure I want you to label this correctly. Higher high, higher low, higher high, higher low, and then look for 100% retrace and break a structure and label the break a structure with an X. That's what I want you to practice. Okay, so now price, say it's broken structure, right? And so what is the big deal of, what's the big deal about price breaking structure? Well, when it breaks structure, that's the first signal to you that something different has happened. Definitely. We actually have a clue now. We see that the previous higher low has been broken. That means possibly a downtrend is going to start. That's our first clue that the uptrend has ended and that a possible trend change is happening. And this is where people sometimes get kind of confused, and I want to kind of clear that up for you. After there's a break of structure, we don't try to label, if it's like bouncing around and kind of not sure what it wants to do, don't try to label it higher high, higher low. That's when students really get confused, and it's different. It's difficult because after there's a break of structure, price is going to bounce around. It's going to dance around, and it might be wild or it might be calm. It could do anything, but we want to kind of just sit back, let the wildness, let it do its thing. It might be, like I said, it might be consolidating. It might be in this little box area, humming around, just jumping around. We don't want to get caught in that mess. What we want to do is wait till this has finished, and normally it'll change directions, or it might continue up, but we're looking for a predictable pattern. So pretend we've waited it out and now we start seeing a change in direction. So this arrow here is now going to continue from here, okay? And so when a downtrend is happening, now I want you to make sure of this, you understand this. Now the impulse wave is going downwards. So point A is now here. So just like I drew this up here, now the impulse wave is downwards and the retracement is upwards because we're now making a downtrend. So point A is the start of the impulse wave. It goes to point B, so it, price pushes down, and then now when it pulls back, this is the retracement. This is the retracement. And we're labeling that, you don't have to label that, but just know it's a three-part move. A, B, C is the retracement. So it retraces. Again, we're going to ask ourselves, did price retrace all the way to 100%? And if it did, that's fine. And if it continued back downwards, cool, no problem. But if it goes past 100%, well, that's what we call a break of structure. So again, we got the impulse wave goes to point B, then we have the retracement. It could go to 100% and then continue down, or it could break structure. But in this example, it retraced to point C. You can draw these dotted lines just to help you out. To draw these dotted lines, I actually used the trend line tool. So right here, the trend line tool, and you can pick whichever color you want, and you can pick the thickness, and then here I picked dotted lines. So right here, dotted lines, and then you can actually, once you draw it in, like before, you can go save template, and you can, I think I like dashed green line. So I saved it as dash green. So see how it just changed it to dash green? That's kind of what I did. So I want you to do that as well if you want to follow what I did here. Okay, so let's just go through this again. So now in a downtrend, the retracement, this was the retracement, it went to point C, and then we had a new impulse wave. So from point C, it had a impulse wave down, and then we had a retracement. You ask yourself again, did price retrace all the way to 100%? If it did and continued down, structure was maintained. But if it surpassed this previous point, then there's a break of structure and a possible trend change. But in this example, it did not. It made a lower high. So in a downtrend, I want you to label it as a lower low, a lower high, a lower low, a lower high. Why is it a lower low? Because it's a lower low than the previous low. Simple as that. It's a lower low, we label it a lower low. And then when it retraces, we label it as a lower high. Why is it a lower high? Because it's a lower high than the previous high. So we label it as a lower high. From there, it makes a new impulse wave down. We label it as a lower low. Then we ask ourselves again, when price starts to retrace, did it go back to the starting point? Did it go back to 100%? And did it break structure by surpassing 100%? In this case, even if it went to 100% and then continued downwards, like I said, structure is maintained. There's no break of structure. Break of structure is when it goes past the starting point, which was point A. And in this case, it did not. It just made a new lower high. And then there's a new impulse wave from there. And we were expecting what? A lower low. But in this point, in this example, it did not make a lower low. Instead, it went to, say, halfway down. And we can label it as a low, right? Some people, like I said, start labeling everything lower low. Is this a lower low than this previous low? No, it's not. So don't label this as a lower low. Just label it as a low, just for your own notation. That's all these, eventually you're not going to put these notations on your chart. You're just going to see it. But for now, it's to help you just keep in mind that it made a low. It did not make a lower low. So this is your first sign that, okay, something looks a little different. Now you notice that it starts making a new retracement. So it could go back to 100%. So you're asking yourself that question, is it retracing back to 100%? It could float around here for as long as it wants, but if it does not surpass this previous lower high, then there is no break of structure. Once it surpasses it, we can label it as a break of structure. We'll just put break BOS on your charts. When you share your charts in the student group, I want you to label it as BOS, which is short for break of structure. I also want you to label it with the X. Some students, they draw these lines and then they leave out the X. I want to know exactly where you think structure broke with an X. So please place an X and then post your charts in the student group. And either the other students or myself, we will give you feedback and accelerate your learning. This is how you learn quickly, by making mistakes, getting corrections, or getting positive feedback on what you're doing right. We're a community. We're all here to help each other. Use the student group to your advantage. Those students that are doing the best right now in our student group are the ones who are fearless of making mistakes. There is no shame in making mistakes. There's no shame in being shy either, but the thing is, get over your shyness. Do you want to learn a new skill, a new rewarding skill quickly, or do you want to learn it slowly? Obviously, you want to learn it quickly, so let's get over our fears and really use the group to our advantage. Okay, so that's what I want you to practice. I want you to practice drawing an uptrend. I want you to know that it's a ABC movement. I want you to know it consists of an impulse wave and a retracement. I want you to know that in an uptrend, the retracement is in this direction, right? This is the retracement. In an uptrend, this is the retracement. This is the retracement. I need you to absolutely know in an uptrend what side is the retracement. And then in a downtrend, it's the opposite, right? This is the impulse wave. This is the retracement. This is the retracement. This is the retracement. Impulse wave, retracement. And now you should understand what it means to, price go back to 100% or to break structure. You should know this. And when it breaks structure, I want you to mark it with an X. And I want you to make sure your labeling is correct. On a downtrend, it's a lower low, a lower high, a lower low, a lower high. And on an uptrend, it's a higher high, it's a higher low, higher high, higher low. If it does not make a higher high, then just label it as a high. If it does not make a lower low, just label it as a low. These are just for your notation. And remember, after a break of structure, don't try to label this craziness that may come up next, right? When I said it's, when I drew the box previously, this is called consolidation, when it's kind of jumping in between here, or sideways, it's moving sideways. Don't try to label what's going on in there, because it's just craziness right now. Price is trying to decide which way it wants to go. So I'm going to make this this diagram that I made a download. I'm also quickly going to show you another diagram really quickly here. So same thing here, I drew this a few weeks ago to help some students out. So just same thing, higher high, higher low, higher high, higher low. And like I said, once you see something different, right? It made a higher high, it made a higher low. We're expecting a higher high, and it can, like I said, this is like sideways movement or consolidation. It can just move around here, and then when it surpasses this previous level, mark it with an X. That's where the break of structure happens. And then it may be a little bit crazy. It may not just start making lower lows, lower highs like I'm showing it here, but Essentially, after a break of structure, normally some sort of trend change is happening, and we want to wait for it to show itself, and then we will start labeling it, and we'll just do like what I showed you. And here, again, when you see it consolidating, if it breaks the previous lower high, mark it with an X, label it BOS, break of structure, and then start labeling the uptrend. So you see how the labeling changes after the break of structure. It goes from a higher high, higher low, to a lower low, lower high, and then when there's a break of structure, higher high, higher low, and then break of structure, lower low, lower high. And then see here, see how I drew this a little different. So it was making a lower low, lower high, lower low, and then it retraced 100%. And like I said, it could start forming a downtrend again, but here it just made a little dip and then finally broke structure. So I want you to know that it's not going to be perfect every time, but if you have this fundamental, definitions of what break of structure is, and you know how the market moves, you can, regardless of how the market reacts on the charts, you can always tell when a previous level has been broken and when a new trend is starting. So I'm going to also make that as a download. Okay, so I hope you understood that part, and let's move on to the next part of this lesson. Okay, so I marked up this example here. So let me try to zoom out really quick. So I was just making a bunch of boxes like I told you. After, when you've marked up all these boxes, then you can go back like what we did here in the beginning. You can go back and start, practicing. Mark up the lower low, lower highs, look for a break of structure. So essentially, see here, I drew this box here. This is some sort of sideways I put consolidation or sideways movement. See how it's moving up and down. It's in a box. It's not really going anywhere. And then this next example, it's a downtrend. And then here it's forming a slower uptrend, but it is uptrending. And what I want you to bring to your attention right now is this chart right here. So let me just correct the zoom so you can see it properly. Whoops. Like I said, remember you can use your wheel mouse. Also on your keyboard, you can hold down the control key and then use your wheel mouse, and it'll zoom on the same. It'll zoom in and out depending on where your mouse is. If you're on a MacBook, you can hold the command key down and use your wheel mouse. So just practice using all these tools. Okay, so right here we see that we're just going to start here. Point A, this is the impulse wave like we talked about, goes to point B, and then it starts retracing to C. And we just ask yourself, did it retrace to 100%, the starting point, which is point A? Did it break 100%? Well, no, it didn't. So then here, just draw a horizontal line. You can go to the wick. Sometimes you go to the base, sometimes go to the wick, but we're on the daily chart right now, so I'm gonna go to the wick, because essentially the wick is the highest point. So if it's going to retrace all the way back, really 100% is all the way to the wick, right? It can go all the way to the wick and then continue down without breaking structure, right? And so it went to point C, and then from there it started its downward movement. It made a lower low. We labeled it a lower low, and then it started retracing. Again, we ask ourselves, did it retrace to 100%? Did it break structure by surpassing 100%? In this case, it did not. You can see now that we're looking at the candles. Just draw a vertical line here for your practice. You can put a note here, 100% or BOS, just for your information. You can label it as a lower high. Like I said, we're going to be labeling a downtrend, lower low, lower high, lower low, lower high, lower low. And the same thing, just you can draw these arrows, use two colors if you want, just so you can program in your head, this is the retracement, this is the impulse wave, this is the retracement. And you ask yourself every time, did it retrace to 100%? Did it break structure by surpassing 100%? If it did not, then just draw it to the next lower high, label it lower high, put in the horizontal line and draw the next impulse wave down and label it as a lower low. This is the retracement. Ask yourself, did it retrace? Did price, price could float around, and if it goes back all the way to the beginning point and breaks 100%, what is that? That is a break of structure. We would mark it with an X wherever it happened to, whichever point it happened to break. If it broke right there, we would label it with a X. But in this case, it did not. It formed a lower high. We can mark a horizontal line on the top of the wick. Just put a little notation here to remind you that that's the 100% break of structure point. And then here it's making a new impulse wave down. We label it as a lower low. This is the retracement. Did it retrace back to 100%? No, it didn't. Did it surpass 100%? No, it didn't. It made a new lower high. And then here, so I'm going to stop drawing those arrows because I know I'm repeating myself many times here, but it's very important that you understand this concept. And here, this is when, it's not always going to look this beautiful. It's going to sometimes, look like this. So in this time, just help yourself. Just kind of analyze it. So it retraced to here, and then it started its, let me get another arrow. It started its downward movement. But you can see this previous lower low. Just draw yourself a horizontal line. Like if you're not sure if this is a lower low, draw yourself a horizontal line from the previous lower low and ask yourself, you see these wicks? Actually, it did not form a lower low. So you could label it as a low, or, you don't have to label it. Just know that price has not made a lower low. That's it. And now we're looking for, is price going to retrace? Label this as green. Let me change it, green arrow. Again, we're looking, is it going to break 100%? Is it going to go to 100%? I don't know. We're just watching it, but look, it did not. It didn't go back. It didn't even go back to 100%. It actually made a lower high. You could label it as a lower high, right? It is in fact a lower high because it's lower than this previous lower high. So price can float around here. Here I put another horizontal line here because I wanted to see, is it a lower high? And let me stretch it this way. So in fact, it is a lower high, but you know what? I already know it's a lower high. I'm not going to really label it just for simplicity. Then here you can see that this actually formed a new lower low. So I'm going to label it as a lower low. This is a new lower high. We can see that it's a lower high. And then price made a lower low, and then it made a lower high. And so you can just use these lines to just help you just identify the lower low, lower high. And this is how the market moves. So later I'm going to teach you how to join the trend during these retracements, right? We can make a lot of money when the market pulls back, and we can sell in the direction that the trend is going. That's the name of the game, but it all starts with being able to identify market structure. So lower low, lower high, it made a lower low. And here this is like a consolidation zone, right? It's kind of in this sideways movement. That's okay. And here, see how there's a gap here? Whenever you see a gap here, look at now my eyes are looking at the date column here. So if you see right here, it says the 30th of November, 2018. And then if I move it to the right, it jumps to, hold on, it said 30th of November, and then it jumps to the 3rd of December. This is a weekend. So when you see a gap like that, it's a weekend. Yes, we see that, it was forming a lower low, and then it actually retraced. Let me use the right arrows. 1 second. Let me draw this. So this is the impulse wave. I'll make it red. And then this is the retracement. In fact, it did retrace 100%. Here, this candle jumped up, and then it got hammered back down, and it was kind of floating here. And that's when this was like Friday. You know, actually, these are daily candles. So this right here was Friday, and then on the weekend when the markets are closed, I guess over the world, even though the markets are closed, people are still buying and selling currencies when they travel and buy things, right? So the market's always the price of the currency is always changing, even when the markets are closed for us to trade through our computers. But here, that's what you call a gap. See, there's a gap there. But as soon as the markets opened, you know, a couple days later, it quickly jumped back into this. So this would be considered a break of structure. But like I said, after there's a break of structure, don't just try to predict that it's going to be going this direction. We don't know that. A break of structure is just telling us that something has changed in the previous, what we've been seeing previously. Something has changed. We label it as a break of structure, and we kind of sit back and see what it's going to do next. And what it do next, it just jumped back into this sideways channel. And actually you know, this must have been some news event, and it actually formed a huge wick. So if you sold off of here, possibly, I'm going to show you how to enter the market later. But, you know, it dropped really quickly, and, you know, these are all daily candles. And then it had this huge wick, and this was probably a news event. But nonetheless, we just label it as a lower low. Usually when there's a wick, price will eventually go back and retest that area. And, you know, look what happened. Price went back and, you know, retested this area and made a lower low. So this is what I want you to practice. Just, you know, labeling lower low, lower high, lower low, lower high. And then here, let's just show you this example here. So let me get my arrow tools. So it made impulse wave, and then it started to retrace. I'm going to make this green to keep the same format. That's the retracement. We could have joined possibly and sold here, who knows? We'll talk about that later. Now this is the impulse wave again. I'm going to make it red. And it actually went and made a lower low, right? Made a lower low. Now we can see this was from this long, like, you know, it was sitting in here. It took many days to actually make a lower low. Then it made a lower high. And then finally it made a lower low. It then made a, let me just fix this chart. It then made a retracement, which is green arrow. It made a lower high, and then it made this big long move down. So it was a quick move down. Look, it just dropped, made a lower low. And then we ask yourself, when it starts retracing, is it retracing to 100%? What's 100%? The previous lower high. Well, look what happened. Price started moving upwards, and see how it's kind of slowing down. See these candles getting smaller, and then an explosion. Usually when it breaks structure, there's some sort of, it breaks out with some force, and that's where we're at right now. Now we're back to 2020, July 2020. That is what I want you to practice. You know, let me just scroll back and see what else I may have marked up for you, but essentially those are the things that I wanted to cover. Let's just take a quick look at some of these other examples I marked up here for you. So here we're making a lower low, lower high, lower low, lower high, lower low, lower high. We have the impulse wave down. We made a lower low. And then here, why I highlighted it is because this is an example of 100% retrace, right? It started here, came down here, retraced 100%, broke structure by surpassing 100%, and then it started to make a new trend, and something changed. So it made an uptrend here, it made a higher high, then it made a higher low, and then it got caught in this sideways kind of zone. And so I drew a horizontal line here. So it's not making higher highs currently, see that? But it is making higher lows. See that? This is a higher low than that point. This is a higher low right here. It's a higher low than this point. So you can, even when it's in a rectangle or sideways, you can still make notes of what's happening, right? Make notes of what's happening. And then, it kind of got in here, made a higher high, higher low. Here, again, it broke structure. Like I said, after it breaks structure, don't see this. This is what I'm talking about. We don't know what it's doing here. We don't, after it was making a higher high, higher low, higher high, and then it retraced 100%, broke structure, and now it's doing God knows what, right? We kind of just sit back, we can label it a little bit just to make some notes, but then after it starts calming down, it starts making a repeatable pattern. That's when we jump back into the market and say, okay, I see what's going on. Now I can place some trades. So that's the name of the game. Like I said, after it breaks structure, don't rack your brain trying to figure out what's going on. I believe I already showed you this point here. It just retraced 100%. So we're pretty much finished this lesson. Let me just see what else I might have marked up. This is a downtrend. You can see and label it downtrend. Lower, 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 high, lower, low, lower, high. This is consolidation. Here you can see it's making a higher high, higher low, higher high, higher low, higher high. And that's pretty much it. But I want to also bring to your attention, we're on the daily chart right now. Once you master this on the daily chart, I want you to drop down and do it on the 4-hour chart. And in the 4-hour chart, you're not going to be able to go back to, right now we're in 2011. On the lower time frame, we can only go back so far. So after you've mastered all this, I want you to also practice. Let me just hit reset on the chart here. I want you to practice what you learned here on the lower time frame. So I want you to go, say, to the 4-hour time frame. After we're going to spend a lot of time on the 4-hour time frame because that's where a lot of the opportunities happen. So I want you to, on the lower time frame, the same thing happens, but you'll see more opportunities or more break-up structures, more uptrends, more downtrends. The lower time frame just means more movement in different directions. So I want you just to, once you master this, try to do the same thing on the lower time frame and try to master this skill, all right? And then, like I said, we're doing this on a second chart. You can either go back to, once you're finished marking up the charts, you can go back to your other chart. I don't have it loaded right now, but just like I said, you can go load chart if you have it saved. I believe it's AUD master, and this is what I do. I go back to my master charts, and I'm going to show you all this later, but essentially I got lots to teach you, and hope you enjoyed this one. I really had fun bringing it to you, and I'll see you in the student group and in the next lesson. Thanks for watching. Chat soon.